Hey, it's V Lee here. So, are you ready to explore this exciting world of real estate investing? Today, in this episode, I am joined by Rick Bresler, a seasoned house flipper turned private lender. So, together, we'll dive in various strategies and opportunities for making money in real estate investing. So, whether you are a seasoned real estate investor or just starting out on this real estate investing journey, this conversation between Rick and I is packed with insight and practical tips to help you to be profitable in real estate investing. So, let's get started and learn ways that you can be profitable in the dynamic world of real estate investing. Rick, welcome to the Real Estate Ballers Show. Can you give the audience a quick introduction?
Yeah, and thanks, V, for having me. Yeah, so I started both my oil and gas career and my fix and flip career back in about 1982. Bought my first house in 82. I came to Houston about 1980. Got in the oil and gas patch. Was always interested in real estate, so I started flipping as a side hustle. Bought my first foreclosure at the foreclosure sale in 1985. And back then it was easy. That's how I started buying most all my properties because there's no competition back then. It's not like it is today, where it's a total zoo then at the Bayou Center if you're going to try to buy a foreclosure or any other courthouses around. So I was flipping as a side hustle. Probably was part of 70 plus flips during the time. And then after the 2008, 2009 crash, I was lucky enough to be sitting on a bunch of cash, and I bought a bunch of rentals. I thought I was a genius, so I thought I bought them. I timed the bottom of the market. When I bought them to flip, by the time I got done with the flip, the market moved another $30,000 south. So that $30,000 difference was a difference between no profit and profit. So I was fortunate enough where I could keep them as rentals, and then the market just shot right back up around like 2013, 2014. But I refinanced those properties. And then I wasn't very smart because I thought the market had shot up too fast and I wasn't going to be able to buy anything until the market corrected again. Well, the market never slowed down, but that was kind of a blessing for me. I was able to start lending my money out. And that was before I even knew about hard money lending, private money lending. I had some friends that needed some help. And the next thing you know, I'm in the lending business. So the lending business was, again, a side hustle. I was still working my oil and gas job. And then finally in 2017, we just turned that into a real business. And we've been doing it full time since actually 2018. And the business has taken off. We've been blessed.
That's awesome. I think just listening to your story is kind of sound like you were trying to time the market a little bit, but then you actually just stuck through, just went along with it, and then you came out fine.
Yeah, so fortunately I had cash, right? If I had been on hard money, I could have been in big trouble. And that's how some investors are right now. But I was lucky, and things happen for a reason. And it taught me a lesson about trying to time a market. I'm a lot smarter now. Now I know if you're going to do something, you kind of want to stress test what you're doing. If what's the downside, and can you survive a downside? A lot of people, we got spoiled, in the last, 10, 12 years, the market kept going up, up, up. You could make a mistake. You can make a big mistake and still live for another day because the market cured your mistakes. You make a mistake now in this market, or people that have already made a mistake, like we were talking a little bit earlier before the show, there's some people in trouble trying to get out of their hard money loans, trying to refinance because they just can't do it at these rates.
Yeah, you're right. In the past, 2020 and 21, we all got spoiled, right? Because the worst mistake you can make got cured. Because when you close on something, 10 minutes later, it's appreciated already. So it made up for all the mistake that people make.
Especially in Galveston, we were doing loans where we thought the ERV at the time we did them was going to be maybe 340, 350. And by the time they got done with the rehabs and went to refi, the property was worth 450, 500. I mean, it was just insane. I have a little rental portfolio. That thing shot up. people that were overspending. They busted their budget, but they were fine. They still got all their money back on the refis. That was then. It's not the same story now.
I hear you because I was actually looking at several property down in Galveston. We always buying in Galveston because, we love the vacation rental market there. And this house was listed pre-COVID, I think 800 something, and it didn't sell. And then after COVID or during COVID, it was listed at 1.2 and it sold. So the seller in hindsight, didn't sell it at the time and was upset, right? But then they end up making 400,000 more. So
That's the way real estate is, though. Real estate, except for the 2008, 2009 bubble, through all the recessions and everything, real estate has always gone up. They had that dip in, the housing bubble back in, 08, 09, 2010. But except for that dip, and if you were able to hold your property during that dip, then you came out fine. It took several years for you to get back to even. But if you kept it, and that's when I bought all my rental properties, the properties have doubled since the rebound. So investing really is a long-term game. Flipping is a lot of work, but it's a long-term game, and that's what I'm trying to. My interest is for borrowers who don't want to flip so much, but they want to buy and hold. That's where you're going to make your wealth. That's where you're going to make your money, and it's nice to make money while you sleep. You can't make money while you sleep if you're flipping.
Totally agree. You and many other guests that we had on the show all share the same message. Real estate is a long-term game. And if you look at the curve, it's always trending up, right? So I can't say the same for stock market or Bitcoin at this point. But so you started out as a flipper back in 2000, was it 2011 that you actually started flipping houses?
Well, I started flipping in 85.
In 85,
So
okay.
I did about 70 flips between then and this is a side hustle to my oil and gas job. And then, but I was out of the market prior to the bubble bursting. So I had nothing in the game at that point. And then when the bottom fell out, I was just like, okay, it's time to get back in. And so I got back in at that point. And yeah, it's all been gravy since then for me. I was lucky to time that market. I was in from the start of that historic rise in values.
So you started then. You said you did 70 something houses, but you still had a full-time job. That's a lot of work. That's very disciplined because most people, when they have that number of houses, they'll quit already.
Yeah, so that's, there's about 20 years in there. So we'd be real busy, slow down, real busy. Just kind of think how things went. I have partners and stuff that I didn't do it all by myself. I just always loved real estate. So some people like to go play golf. I do too, but not that not that bad. Some people like to you got to do something besides just work at your day job. And that was, to me, it was just a lot of fun. I'm an engineer, so doing rehabs on the side, fixing stuff was just something I like doing. So
It's right in your wheelhouse, huh?
it didn't come without some personal sacrifices. Looking back, first ex-wife didn't like the fact I was never around. I was always working.
Now you sound like a cop.
So I had yeah, exactly. So it's just didn't see eye to eye on how to spend our time and stuff. But I was, real estate's kind of like an addiction anyway. The people that are in the game, they're like junkies, but they're real estate junkies. And we're deal junkies, right?
Yeah.
It's just the thrill. It's the thrill of the deal, and there's just something about it. It's not for everybody, but for those who get bit, it's very addicting.
So go into that transitions. You started out, you're flipping houses. You build up a good size of rental portfolio. What led you to decide to become a lender, to lend out your money? Because isn't that scary? Like, using your own money is one thing. You're an engineer. You're smart. You can look at your deals. But giving your money to someone else, do something else, that's an entirely different game.
This episode is brought to you by Buzz Vacation Rentals, a premier property management company in Houston and Galveston. Give Buzz a call today if you need help in managing your short-term and vacation rental properties at 281-549-8432 or visit their website at buzzvacationsrentals.com. Now back to the Real Estate Baller Show.
It is, but you have to be smart, right? So, because I've been in real estate for so long, I never was going to exceed, even before I knew 70% of ARV, I wasn't going to lend I wasn't going to go deep, right? So the first deal I did was in the Woodlands to a friend of mine, and we did a deal for 240,000, and I just did it for 1% a month. So I'm getting $2,400 a month interest on that money. That was pretty addicting right there. I still got my day job, right? So I'm getting $2,400 a month. And I was telling a buddy of mine at work, it's amazing how, the timing, happens, right? He says, well, I got another friend like you. He works for Hess. He's got 4 townhomes he's building in Midtown. He's in for about 800 grand. He cannot finish. He's out of money. And again, this was after the burst. Banks weren't lending on real estate. He was stuck. I went and made a deal. He needed 400,000 to finish, but he had $800,000 into the deal. And I was first lien position for 400. Very safe loan.
Oh, so he had all of his cash in
Yeah, all his
800,000
ran
in
out
his
of
cash?
So
Okay. Oh, yeah, that's a sweet deal because now you're in it for 400.
I'm 400. I got $800,000 of his own money in the deal. I wish all the loans were like that, right?
Yes.
So now I'm getting $6,400 a month. And that was it, man. That was the shot in the vein right there. I was addicted at that point on, and then the business just slowly grew by just word of mouth. And next thing you know, I'm finding out about the industry. I didn't know there was a cottage industry called hard money and private money. I just stumbled into it. So it was just I was just blessed or just lucky, however you want to look at it.
So at that time, did you still have a full-time job or yes?
Yeah. So if you're only doing 1 or 2 or 3, you can easily handle it as a side hustle, right?
Yeah.
What happened is it grew to where all of a sudden some of the guys that worked with me at work, I'd be talking about, had engineer friends that are working with me. They wanted to get in on the game. Next thing you know, we've got $2 million loaned out on the street, and everyone was making 12% on their money. And they just, they thought that was the best thing since sliced bread, because all these guys just got killed in the stock market a few years earlier, right?
Yeah.
So
Yeah.
if you can make 12% and you got the real estate for collateral, and a lot of those people are still my capital partners today. And so it just kind of grew. Word of mouth came. Hey, my mom wants in. Hey, my wife, dad. So just all of a sudden, these people came in. They wanted to be capital partners on these deals, and we just so I got to be a point where I had to retire to do the private money
You were
lending
forced
business.
to retire.
Yeah, it was like I had to do one or the other. And after doing 35 plus years in oil and gas, it was time to do something else, if for no other reason.
Well, are you happy you're doing real estate today?
Oh, I love it. I love it. It's a relationship business, right? So we have close relationships with both our capital partners and our borrowers, and it's a neat little community. I'm part of a little private money lenders club. There's probably 10 different private money lenders. We get together and share stuff. The beautiful thing about Houston is there's so much. As long as you have the abundance mentality, you don't really have to worry. All my private money lending friends, they're almost always tapped out anyway, right? So, and you see the other big guys out there. I think once I was talking with Eddie, they were doing X amount of money, and the next thing you know, they're doing 5 times that amount of money. Then so everybody's been expanding in this business, right? So Houston is a great place to be doing real estate.
So do you still flip property today or just lending?
So I don't flip, but we do buy. I'm buying lots on Bolivar in a certain spot. I'm slowly buying all the houses next to my beach house down there, trying to anyway. And then I got lucky. I got into I don't want to jinx it, but I'm trying to buy a 28 package deal around Notre Dame in South Bend, Indiana. And then I've got another 6 houses I'm buying up there. So that's 34 houses total. And that part, northern Indiana, Gary, Indiana, South Bend, Indiana, that's probably the best place to buy rental property right now. They cash flow. There are cash cows up there. And we got lucky. We're buying these houses for about, people are going to fall over and say, I lied, but around $26,000, $27,000 a house on this package. This is one of these things where I think we got lucky. You never know how good you do until the end, right?
That's right.
You buy the 28 homes. There's a lot of work. Fortunately, I've got good boots on the ground up there in South Bend. I've got some good friends up there. They're going to help me do the deal. So this time next year, maybe, hey, Rick, come back on and What did you learn? Did it go as planned? Did you get your ass kicked? What happened on that deal? And it'd be interesting. But it looks like a home run. Hopefully, I don't trip rounding the bases.
Well, we never buy a deal and get into a deal with the intention to lose, right? But it happens.
Yep. Yeah, if you haven't lost money in real estate, you haven't been doing it long enough. So,
I think there's two things that guarantee in real estate: lose money and get sued. you know?
yep, I'll attest to that.
Yeah. So you do it long enough and you do enough deals, you either go lose money or get sued at one point.
Yep.
So talk to us that now that you on both sides of the spectrum, like, being a flipper, you hold property, you be a lender, like where do you see it being the most risky?
So the risky is still primarily with new borrowers, right? Because we all are trying to grow and expand our business. We get new borrowers in. We prefer, and everybody else prefers, right, to have repeat borrowers, right? Mm-hmm. But as we go out and market and meet new people, one of the risk is it's always the borrower, right? If you got a borrower that's going to make it happen, regardless of what happens, your investment's pretty safe. But, I get called all the time. Well, why are you worried about my FICO score for? I thought you were asset based. Oh, we are asset based, but it's your asset we're basing it on, not so much the house itself, right? It's like a jockey, right? You can have a good jockey on a bad horse and maybe win, but you put a bad jockey on a good horse, he's not going to win that race, right? It's still a lot about the borrower. People don't, everyone says they're asset based and everyone's marketing. We're probably guilty of the same thing. We're asset-based lenders, but we just have to define what asset-based means. It means we want a good borrower behind the deal as well as the property, because things aren't going to, good things do happen, bad things do happen to good people. Mm-hmm. And sometimes, you do enough loans, you're just going to come across situations like that, and you're just going to have to take a property back. You don't want to. They didn't want it to happen. They'll just say, here. Usually they'll deed it back to you. When they can't, when they have to throw their hands up, they don't have the resources or whatever. But when they do that, you don't want to be upside down. So the problems we had with bad loans in the past, it was because of the borrower. And fortunately, we've only had like 3 bad borrowers.
Is it due to lack of experience?
No, it's just we should have. Our due diligence would have uncovered the fact that we shouldn't have made the loan to 3 of them. One of them was just didn't see it coming. They were basically deal junkies. They had so many deals, had health problems, and they lost double digits on deals. They had a bunch of properties they got foreclosed on, or they had to give back. They just weren't able to perform. They were going to be good deals. They just couldn't perform.
Yeah.
3 of them were borrowers that we shouldn't have lent to. Yeah, we had done our due diligence. We would have known, we looking back at the deal, what went wrong. Yep, never should have made the loans to begin with. Fortunately, we didn't get stung. The sting was minor. It could have been a lot worse, but the sting was minor on 3. One of them, the sting was pretty good.
So you in it for what, less than 2 double digit? Or triple digit?
Let's put it this way: we had, one of the borrowers was $100,000 over budget.
Oh my!
On a house. This is a house in Galveston. They were over $100,000. They're $100,000 over budget. How do you get $100,000 over budget?
Yeah.
Sorry, you're not giving any more money, and they weren't done. I mean, they still weren't done. We just had to take the project over and finish it. Turned into a blessing in disguise. We found an amazing brother combo contractor down there. They came in and finished this place up. Looked like $1 million, and we sold the property for probably $150,000 more than we thought we were going to be able to get for it anyway. So came out all right, but that's how you learn, right? I mean, if you're not getting your butt kicked, it's because you're not out there trying.
I think that just based on what you said, it sounds like it's obvious that being a flipper. Actually, in all of the real estate area, landlord flipping, wholesaling, lending, it sounds like the flipper assumed the most risk because they have so much money in the deal and hoping for a good payday. But if they don't manage the project properly, that's what ends up happening.
Most borrowers they went in with as little skin in the game as they can be. Lenders,
Right.
we want as much skin as we can get,
Yeah.
but still be competitive, right? So
Right.
it's always that balance. That's why it's always important to have some skin in the game. We have a few borrowers and everyone probably has these couple that doesn't matter what they do, if we're not worried about it. They're gonna make it happen. All they have to do is tell me, hey, I need $20 million tomorrow. I don't have it, but if I had it, I'd give it to them tomorrow. I know they're going to go do good. Do not have to worry about them. But your newer borrowers, the ones with not as much experience, you have to be real careful with them, and you have to decide whether or not you can really take the risk, because it's all about as you'll learn in real estate. Real estate boils down to a game of risk management. There's no such thing as zero risk, but our goal is to get risk as close to zero as you can get. And that's the name of the game now is, how do we get the risk down to as close to zero as possible? And since we're investors, I've flipped a bunch of homes. A lot of other lenders that are out there started off being real estate investors, and we're investors lending to investors, but we have a lot of wisdom to share. I had a new person in the office yesterday. It's been like almost 3 hours with him. 26-year-old. He's got several properties. This kid is going to be a rock star.
Wow. 26 and already got several properties. Yes.
And he got several properties. He's got them free and clear too. So
Wow.
he can take that and 10x what he's doing. In 5 years, this kid is going to be a rock star. So that is refreshing, right? So
Yes.
whatever this guy wants, I'm all in, right? He gets it. He's a financial planner anyway, so he just doesn't have the experience yet. He's still young, but he's going to absorb everything like a sponge, and it's going to be exciting working with him. So. And that's really the joy you get, right? Because I'm one of those. I like to see people succeed. We like to see, flippers. They're making the place better when they
Right.
leave than when they found it, right? A lot of investors and flippers get a bad name because there's, I don't know if it's more because of the wholesalers the rookie wholesalers out there don't really, but whatever the stigma is, the bottom line is our industry, we make it better than it was when we found it. And that's what's cool about it. And we help people launch their careers and get real successful in this, or as a side hustle. We got several people that they're oil and gas people. They're flipping on the side like I did, and they're making nice money on the side.
I still do think that, for the dollar per hour, you get a very high pay dollar per hour. If you look at it, like if you just flip 2 houses, 3 houses a year, that replace a full-time somebody annual salary. And you don't work all 40 hours per week. If you enjoyed this episode so far, do hit that like and subscribe button now so that we can keep giving you tips on real estate investing.
Yeah, and I always tell them, but don't flip it if you don't need the money. I mean, some people need the money, right? So they have to flip to build up some cash. But if you got a good W-2 job, try to save those as rentals. And if you could do one a year, in 10 years, you're going to have 10 rentals. And you look at the numbers, the money is in the long-term keeping of them. That's where the wealth is going to be created. And even, especially in today's market, I'm going to get off script a little bit. So in today's market right now, because of the high interest rates, there's deals that don't look very attractive. But if you can hold on comfortably for 12 months, and you take that 7.5% interest rate you're getting now, and you refinance, we should be back in the fives in 12 months from now. Look how good that number looks. Houses are still going to appreciate.
Yep.
There's still a supply-demand imbalance. There's not enough housing out there. There's still going to be, in this year, I'm thinking at least 5% growth, even this year. Next year, probably the same. So if you're trying to wait till later in the year, well, that house you're looking at is probably going to be 5% more. You would have been better off taking it. If you can break even, refinance it. And if you're going to refinance, it's probably going to be worth more. You're going to be able to get, you'll probably be able to cover your closing costs, have a lower payment, and then you're really cash flowing. And then over time, that every mortgage I got back in like 2012, 2011 when I refinanced, those mortgages now are down to like $80,000 I owe, but the properties are worth $280,000, $300,000. Between appreciation, principal buy down, the equity you bought in the deal, all of a sudden you're a superstar.
And meanwhile, you got the tax write-off, right?
And you're not hardly paying any taxes, right? Because if you got leverage, you bought it, got depreciation, you're hardly paying any taxes on it, right? So, I mean, what could be better? It's unpredictable, right? We all want safe investments. And it's not as much fun as playing Bitcoin. It's not as much fun as playing the stock market or gambling in Vegas, but it's steady, predictable growth.
So what's next for you, Rick?
So we're doing this, you got to do something. So my goal is to get my team up to where they can run the business themselves. We've got people that came in, they want to get their mortgage origination license. They want to start doing their deals as well. They see what we're doing. So hopefully we're grooming future investors. They can take the company, because I still got, my retirement money in real estate. I want them to be able to manage it, but don't want to get too like biblical, right? But retirement isn't in the Bible, right? Retirement is an American thing, right? I would be bored to death if I was just retired and all I was going to do is play golf or play tennis or whatever. I like the real estate game.
Yes.
So I'm probably going to focus, I want to get the lending business where I can maybe toss it over and then maybe do more development type stuff. I like the resort areas, maybe do more deals across the country.
What is the one thing that people might be surprised to learn about you?
Not just the fact that I've spent 40 years in the oil and gas business, but that was a blessing. I was able to manage and direct, multi-billion-dollar projects, customers like BP, Exxon, Chevron, ConocoPhillips, those types of companies. I had an amazing career, and then just my side hustle for my second career. So my advice is, if you've got a good W-2 job, don't quit your W-2 job to do real estate unless you're really doing well in real estate. Because real estate's hard to go into early. Once you get the machine going, it's good, but it's hard it's kind of like anything where you're a doctor or whatever. I mean, it's hard to get things going and be good at and be good at all kinds of facets of the business. You can't be just a good acquisitions guy.
Yeah.
You can't be just a good fix-it guy. You got to have at least 5 different skill sets. So I think I was blessed to have those skill sets. I married someone that's got those skill sets. We got people that are working for us that we're trying to develop some of those skill sets. But keep your day job, do it as a side hustle, partner with people. You can still do very well. And then when there's a point in your career where, hey, I don't really need the career now, I can just go do what you love if you love doing it. Because there are probably people I know want to get into real estate, and after a year, man, they're done. It's not what they thought was advertised. It's a lot of work.
It is a lot of hard work.
It's hard work, but it's fun if that's what you like to do, right?
That's right. Because I tell you, when I started, my family and my friend looked at me like I was nuts. Like, what the heck was I thinking getting into this ugly house business?
Yeah, and knowing what I know now, it's scary trying to get somebody new into the, someone's new coming in. I know what they don't know. And it's scary, right? And I like to be a mentor, but mentoring takes time, right? So I always say, if you're going to be, there's people out there that do mentoring, right? Why don't you go get with those folks? Wealth clubs, Strata Ventures, Lifestyles, Phil and Shanoa Grove, and all these different people out there that do mentoring and training. Go find somebody to get educated. It's really a key from blowing. If you don't, you risk blowing what savings you've got, and you don't want to be one of those one and done casualties, especially in this market we're in.
That's right. Yes, this market, the market, the point where we are right now does not really allow room for mistakes, in my opinion. So you got to be real careful.
The lucky ones are getting retired, right? There's a lot of the tide's gone out. You're seeing who's in trouble, but if you are in trouble, patience. If you can afford to be patient, because the market always corrects, it always goes up, it always gets better. So I'm excited about, especially in our business. I mean, there's going to be a ton of refis coming out, right? So if you're a lender, you may be struggling, especially if you're on the conventional Fannie Mae. Volumes are down, but there's going to be another huge refi tsunami, right? So to me, it's always exciting.
I think in 2024, when the interest rate may go down, we're going to see a lot of refi out of the high interest rate that we're in right now.
Oh, yeah. There's no doubt about it. There's, the people are getting stuck with 7-8% loans. They're not staying there.
Yes. All right. So last questions. How does the audience get in touch with you?
My email is rick@kcifunding, KCIfunding.com, KCI for Katie Capital Investments. So Rick at KCIfunding.com. Or if you're good with numbers, my phone number is 281-851-3867. Shoot me a text, phone call, email, and be happy to chat with you about your deal. That's what I do half the day. Half the day I'm probably on the phone talking to investors about their deals. I love it. Don't know why, but I love it.
If you enjoyed this episode, I highly recommend you to watch Why Brian Ditched Landlording. And by the way, please don't forget to give us a thumbs up and share this episode with your friend or colleagues who might also benefit from the insight that we share today. And of course, be sure to subscribe to the Real Estate Ballers Show for more great content on real estate investing and other exciting topics about real estate. Thank you for watching and see you in the next video.